Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as usual. Houston, we have a problem. The economic data is not good. Look at Bob's brain over there melting, trying to understand this madness. This market's not paying attention, but we're going to break it down for you. So let's dive in.
Trade Genius.
Hey guys, we got Black Friday specials. They're really cool. We have the best pricing for the year. You can get our basic package, our advanced packages, our VIP rooms, software, trade options, trade crypto, trade the futures. With us, get our indicators, best prices of the year. Take advantage of it. Thanks for listening.
So Bob, it looks like, I don't know, the lab's not doing well or something over there. What's going on? What's going on with this market and this GDP stuff that makes no sense what's going on right now?
They just figure out new and better ways in which to lie to people. Basically this 4.8% print, all of it was basically a massive inventory build through production because it's not matching the inventory. And before we get into that, Phil, I just want to show people, people always say, oh, you guys making this money in the market. These are attaboys that just came today and yesterday. I just want to throw them up there for people. We put out that chart for the silver trade. Remember those leveraged stocks? I know, Phil, you love it.
Keep going. Keep
17% one trade. Another guy here getting the worm, boom. Another guy, minor stocks, boom. So our system works. We may be macro bearish, but man, there's trades every day. So come trade with us. Look, Cyber Monday trades are on till Saturday. Take advantage of Black Friday specials till today. Best prices of the year. I mean, we're practically giving it away. You'd be remiss if you didn't do it because guys are making money that pay for the whole year in one trade. So with that, I want to get back to our story. So enough plugging TG. But there's a chart out here that shows gross domestic product versus gross domestic income. And all it is product is the net of production plus inventory imports. So when you import a lot, you actually get a higher GDP, Phil. So what they did here was we basically third quarter, fourth quarter, they front ran the Christmas shipping. They got it in early. They started selling the stuff early too, but income's not matching. And so if your income is not matching production, all you're doing is the stuff's going to be sitting somewhere and it's either not going to sell, it's going to cause layoffs in the future, it's going to cause sales in the future. And it's basically just another gimmick in which they use to confuse people, Phil. What do you say?
Yeah, I agree. And, typically when you get a divergence between GDP and GDI, so GDP is a measure of goods produced. GDI is the income against that those goods that were produced. They should more or less be in line. But you'll notice that when we do get these divergences, a couple circles on the chart there, if you recall, those are the last two recessions, right? And to put that into more visual perspective, here is if you take that year-over-year percentage differential on a line chart, and we're skyrocketing here. So this is a big divergence. As Bob said, this is due to inventory buildup. Why is there inventory buildup? Well, demand's dropping off. And so we have bulls that are looking at the GDP, and you have the bears looking at the GDI. And so which one is right? Well, you have to take both into consideration. So if you do that, the average takes us down to about 1.4% here on this chart. Now it's not super dire, but it's not good either, because if you look at where we have fallen from, that's a pretty severe correction in the average real GDP and real GDI year over year. And real means they're taking into account inflation. So it's not a good print. We're at levels that are recessionary. If you notice the last two recessions and most of them prior to that as well, you have a sharp drop down to these levels and then it finishes off, below in a negative reading year over year. And that's really all that we're waiting for here. And I think that's probably going to coincide with the labor market deteriorating further, Bob. So reality is you can look at GDP and you can try to use that as a bullish narrative, but the reality is the economy is much weaker than what GDP is telling us.
Yeah, it's just another game, guys. It's really getting frustrating because they built a scenario where everything on the outside looked really, really good, right? The stock market's up for the year, but really only it's up for those top 7, right? They're showing you that the inflation's coming down, but core PCE is still 3.5%, okay, which is higher than people's incomes are growing, which means that you're just falling further and further behind. They got a massive inventory build going here, and we have collapsing sales and collapsing value in terms of the real estate. And auto markets is imploding. The EV market is imploding, Phil. We're seeing lithium prices just go through the floor. All we're waiting now, which wouldn't make me very happy because I'm overweighted, is that OPEC's doing everything in their power to keep oil from actually plunging. And I think we're going to have an issue there coming up soon. We get a bit of a bump here for the next week or two. And then I think, between the middle of December into February, maybe even into March, oil has a little bit of seasonal, headwinds. And so, I think there's going to be an issue. They dropped barrels per day down 1 million, and the market said, screw you, and they dropped the oil down $2. So I think we're really on a precipice where, Jerome Powell may be sitting there saying, well, I'm going to hold the fort here, and basically the recession is going to blow them away.
Yeah. Well, hopefully we start seeing kind of a realistic reaction from the markets. Like we showed you guys yesterday, Trade Force indicator was rolling over on the daily chart for the S&P 500, and we're seeing further weakness today. So we think Powell's got has a speaking engagement tomorrow at about 11 a.m. Eastern. So we've gotten through the big data points. We'll have to see what Powell says. I'm going to assume he's hawkish, but we think from here, obviously we have month-end flows, and then you also have the first of the month flows tomorrow. That sets up for a pullback next week, I think, Bob, and maybe hopefully your brains will be doing better once this market starts to make a little more sense.
Yeah, and we're going to talk a little bit about the JP Morgan collar tomorrow, right? Because that's having an impact on
We are,
the market
yes.
too.
You guys need to see that tomorrow. Bob's lights will turn bright red.
Yeah. Anyway, hey guys, thanks for hanging with us today. It's they've kept this market flat for like the last 2 weeks, and what they say, stability breeds instability. So just be ready for some market action here. And
Definitely.
I'd love to get your guys' opinions on the data, and you guys give us really good feedback, and tell your friends about us. Enjoy the upcoming weekend, but we'll be back with you for a couple more vids before then. So thanks, Phil. I'll catch you guys later.
See you guys later.
Trade Genius.